Analysts are now widely discussing the possibility of a more aggressive monetary tightening, not only by the Fed but other major regulators as well. And this week, several central banks will hold their meetings. Naturally, the most anticipated one is the FOMC meeting, scheduled for Wednesday. Watch a video calendar on InstaForex TV channel and find out more details about this and other events. Market reaction to the UK macro stats has been rather negative in recent weeks. The pound sterling is losing momentum against the US dollar, even despite expectations of a fifth consecutive rate increase at the Bank of England's meeting scheduled for this Thursday. On Tuesday, the UK Ministry of Labour is projected to unveil positive jobs data. Jobless claims are expected to decrease, as well as the unemployment rate. If so, it will signal a steady recovery of the UK labour market. The pound-dollar pair may start a short-term upward correction if the above-mentioned report is upbeat. The euro could also resume a short-lived rally following the publication of the ZEF indicator of economic sentiment. The indicator is expected to rebound in June from the two-year low locked in April. As a reminder, the negative figure is signaling the pessimistic mood of German entrepreneurs. Such a gloomy sentiment is hardly surprising given the extended lockdowns in China, galloping inflation, and the expectations of a rate increase by the European Central Bank. At the opening of the American trading on Tuesday, USD bulls may assert strength ahead of the PPI index for May. This is the leading indicator that reflects future changes in inflation. According to forecast, the reading could gradually decline to 10.9% from 11% in annual terms. To some extent, it can hardly be called a decline at all. Nevertheless, this moderate drop is likely to force the Fed to proceed with the rate hikes. It will also steer demand for the US dollar. Lockdowns in China are significantly affecting the global market. On Wednesday, China will unveil its industrial production data, which is of high importance to traders. In April, the figure fell by 2.9% in annual terms. In May, the reading is expected to total minus 0.7%. The country keeps coronavirus restrictions intact. It means that supply chains remain crippled. However, if the figure gets closer to the zero level, it may trigger temporary optimism in markets. For instance, the Aussie may start a short-term rally against the US dollar. In the American session on Wednesday, the United States will unveil crucial macroeconomic data that indicates the health of the US economy. Two-thirds of the US economy is made up of consumer spending. This is why the retail sales report is so important for market. After a 0.9% rise in April, retail sales in May are likely to decline to 0.2%. Households continue to buoyantly spend money despite extremely high prices, but an increase in May is almost close to zero. Such a reading may spook investors, causing a wave of a sell-off in the stock market. Traders may also start getting rid of some stocks ahead of the FOMC meeting. The regulator is projected to raise the interest rate by 50 basis points to 1.5% to rein in a soaring inflation. The Fed is likely to take similar steps at the July meeting. Speculators have already priced in rate increases. And to this end, they will mainly focus on the policymakers' comments on the future plans for monetary policy tightening. Any hints of more aggressive measures will facilitate the growth of the US currency and push stock indexes significantly lower. You have watched the Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading with InstaForex.